What up, YouTube, man? It's been a minute since I've been on here. I'm gonna go ahead and talk about some of the new and some of the things that I think are important to look out for the Euro USD for the foreseeable future. Let me know if you guys want to see more of me making these videos where I think to predict the market and kind of give my analysis of what's going on with the little knowledge that I have, right? So we're gonna go ahead and dive in straight away into the fundamentals. Let's go. So as we know that the Federal Reserve has increased interest rates significantly from 2021. So COVID hit, interest rates tanked because they wanted to, give people an opportunity to borrow money. But then that caused a nice big situation where there wasn't any money in the government anymore. So they increased interest rates. They needed money to flow back again. Money was, the economy was booming too much. And that's also a problem when the economy booms too much. So they needed to rebalance. And that's a very common recurring theme, as you can see here. When they increase the interest rates, they lower them down, and as you can see, this is the big crisis here. 2008, if you're curious, they lowered it significantly to stimulate the economy again, and relatively kept them low. Now, why am I telling you guys this? Well, let me show you this. When Federal Reserve increases the federal rates fund, it typically increases interest rates and tends to make the dollar stronger. See how they all tie together? So interest rates tie together. The dollar index now, if we go to the weekly, because that's what's relevant right now, right? We go to the weekly. Everything's been going a lot stronger. Look at COVID. Boom. And then it's very high, right? When the dollar is stronger, what does that mean? When the dollar is stronger, that means foreign currency is weaker. See where I'm going with this? So when foreign currency is weaker, that means there's a lot of, relationship with these foreign currencies and the dollar and the interest rates. So the plan is that they are planning on reducing these interest rates in the foreseeable future. I mean, these are pretty high. Housing markets are in a tough situation as well. I mean, 6% interest rates are high on the 5-year mortgage. On the 30-year loan, they're at 7% for the 30-year fixed. A lot of these mortgage rates are going to drop. Interest rates, this is prime. Oh no, this one's prime rate, which is still high, bro. Prime rate is very high, and they need to reduce a lot of these interest rates eventually because they increased it to, reduce a lot of the market. They want people to spend less money. So people spend less money, they hold more money. When they hold more money, the banks can make more, and a lot more opportunity will arise for these big fish. So in simple terms, we're looking for them to lower interest rates in the foreseeable future. When they lower this, the opposite of this happens, right? The dollar starts to weaken. It's the opposite of this, right? So the dollar will weaken. When the dollar will weaken, the Euro USD will begin to rise. Now, this is something that I've been seeing for a while now. If we just look at the technicals as well, we can see potential for price to come up here, at some point in the future, but that's not something that's 100% sure. Now, what I am gonna say is that's very confident, and I'm not 100% sure again, but I would love to see prices start to inch up towards this area of liquidity. This high, this is a high that's been, resting here. This is almost double top here, like this, right? If you draw this here and draw this here, these are relatively equal highs. These are not the same as these, right? These are not equal highs. This is not equal high. These are equal highs because they are in line with one another. These are equal lows because they're in line. It's not the same as a raid, which is that. Okay, I'm kind of going off of a tangent here, but what we're looking for is for price to start inching up. You can see that price came down, took liquidity. It did not react off of this inducement. We can even just say simple terms, very simple terms. Took this inducement liquidity. You could say, if you want, it didn't actually react there, but almost reacted off of the order block. And on a weekly time frame, we can expect price to keep inching up here. That's what I would love to see. Now on our way down, this is NFP as well. So we have here low resistance liquidity, right? Low resistance liquidity, it's under the form of a trend line. As we know, trend line liquidity is a thing. Look at that. Very low resistance liquidity. And all the way up here, we also have, you know, a high that is not really supporting anything. This high is supported by this high. So I wouldn't even be surprised if price comes all the way up here. This is definitely something you guys want to keep an eye out for in the foreseeable future. Very, very much so. When the fundamentals line up with the technical, that's when you start getting a very, very good opportunity to enter some trades. So I wouldn't be surprised if we see something like that. And this is on a 8-hour time frame. So if you go to the lower time frames, there will be lots and lots of opportunity in here. This will happen throughout a time span of approximately 2 weeks. 2 weeks of opportunities. So yeah, I just want to let you guys know there's a possibility to catch some swings in the foreseeable future, and we'll be able to take advantage of these opportunities. I hope you guys have a wonderful day. Stay safe, and I'll see you guys in the next one. Drop a like if you guys want more. I can do a little bit more detailed next time.